And
I thought we were waiting for the music there, and that's cool. Welcome to the DLA DAO Show, episode 3. Today we're going to be talking about technical analysis. Before we get started, if you don't know what DLA DAO is or what that means, we are a DAO, a decentralized, autonomous organization of gamers, traders, investors, creators, developers, artists, all that good stuff, working on a collective goal to help onboard people from Web 2 to Web 3, and we do it through play to earn gaming. And we also have Framework Fortune Media Network, which is a decentralized network of traders and gamers streaming all the time, including HHTRADER here on the panel, who is one of the DLA DAO devs, head of our security and IT. And then we've got FRESHBUELLER here, our Unreal Engine 5 game developer and also graphic designer, a whole list of things. Both these boys have a ton of accolades behind them. And later on in the show, we will have IRIooster, who is also a trader and DLA DAO dev, coming to talk about his technical analysis. So in the room chat, we have dropped the link to the link tree for DLA DAO. Here in a little bit, we will drop the link to our new Entra community. So if you're new to Entra, or if you've been on Entra and you've been waiting for these communities, the DLA DAO has one, and it will be going up here soon. So I don't think there's anything else I need to talk about at the moment. What's up, guys? How are we doing today?
Very well, very well. Um,
Very cool. Thank you.
Having a great week, just learning, observing, and a lot of times I end up spending most of my week just in observation of the market, just learning and enjoying, grabbing some popcorn, watching people get destroyed. It's just amazing. Um, and I believe all of us in here, we pretty much have some idea of market and the amount of variables that affect the market. I mean, anything anything can affect the market. You never know. For me personally, I am heavy in the stock market. I'm heavy in the penny stocks. But other traders, they have their own choice of poison, I guess you could say, because either way it goes, we're all exposing our money, our liquidity to the market. So hey, pick your poison. All right, somebody else. Who else is in here for forex? Let's go.
yeah, absolutely. So I would just say, myself, I really started off with the fundamentals of Forex and, really, taking 50 pips and making sure that I TP and be more disciplined. But as I got, more mature in the market, I realized, Forex is not really as lucrative as I want it to be. And, I've been really focusing on just a 2 entry rule, being disciplined, and just making sure that I time the market the right way.
I like the trash can penny stocks like HH is talking about. That's what I like to play too. I like to get dirty and filthy with those penny stocks. You ever heard me on
Nice.
my
I
channel?
gotta get into that, man. I ain't
You
gonna
ever
hold
heard
you.
me? Yeah, if you ever heard me on my channel, the way I get all my wins is I serenade my stocks. My
Mm.
saying is serenade my stocks and marinate my steaks, baby. Let's go. Laszlo, what's going on, buddy? How are you?
I'm very good. Thank you very much. I used to trade a lot actually, started with futures and things like that on Binance. But right now, it's not the time to trade for me.
So you were trading, you said futures and then Binance. So you're trading crypto, or are you trading any commodity futures, or just straight all crypto?
I, no, I was actually at the first futures contest on Binance. I was placed number 4 on the battles and also in the top 10, I think, in the normal futures trading. And I thought I'm super good, and I got pretty much wrecked then because I did too much risk and I had leverage. My Bitcoin trade for 125 leverage, and I almost lost half a Bitcoin in one trade. And I never learned my lesson, or I only learned my lesson the hard way, and I learned it the hard way.
Got you. So my speaking of Web3 and crypto, it took me a while to start actually making trades in crypto. I mean, it took a long time for me to do anything. At first, when I first learned about Bitcoin, I started mining it first. I really wasn't taking any trades. I was just mining. And then I ran into Ben here, and I was like, he was showing me all these things that I guess it was more of, you can only do what you know. You know what I mean? If you don't know, it's like, it's almost like being in a room with a bear in the dark, feeling around the room and not knowing it's a bear in the room. You know.
I agree.
But when I was able to kind of analyze where my strengths were, where my weaknesses were, and what kind of news did I resonate with, what kind of catalyst did I resonate with, and of course, like you guys are talking about the futures and talking about forex. Some of those are much bigger markets than the stock market. I mean, those markets are like worldwide. I mean, you can be trading some futures that are talking about beans, corn, soybeans, metals, whatever it is. It's just a huge amount of knowledge. And what I love is how people are able to look at that knowledge and condense it into something that's profitable for them. And I think that's what every trader's journey is. All right.
And speaking of that and everything that everybody's addressed so far, for one, Laszlo, you when you lose the lesson, when you take a loss like that, you got to remember that you just paid for that loss. You could have paid somebody for a course, which could have resulted in the same thing. But the point is, we don't like to pay the stock market, the crypto people, anybody. We like to keep our money. That's what we try to do, right? So take that as a loss that is an expensive lesson. All right. Don't take it as I give up now because of that. 80% of traders fail because they just give up. It's not because they keep trying and keep trying. They just get one big loss and then they're like, oh no. And they're scared to touch it again. And there's nothing wrong with that. I mean, losing half a Bitcoin in a small, I'm sure that was this a day trade, a few second trade, few minute trade?
No, it was actually an overnight trade. Yeah, I was in profit already 30%, but what happened actually back then the market was pretty much, the futures just started on Binance. It was, I don't know, 2021 or something like that, and the market went down in 1 minute. I mean, from
when Bitcoin went to zero on Binance.
No, it went down to, I don't know, to 13,000 from 28,000, something like that, in about 2 minutes, and then moved right back up, you know. But I didn't have a stop loss anywhere because I thought that's not going to happen, and I got liquidated. And
that's what I was going to ask. Where was your stop loss at for it to make you lose a half of Bitcoin?
I was sleeping. I was 30% in profit already. Mm-hmm. Yeah, I usually put up my stop loss in profit when I have a trade. And I fell asleep and I woke up and when I checked the charts, I thought that, what the fuck was that? That must be manipulation, you know? And it
got caught in the fuck you wick, man. We all been there, bro. Oh man, that's crazy.
That's an expensive lesson, but go ahead, H.
Oh, I was about to say, when 2020, or actually end of 2019 is when I started with penny stocks. Before I was doing penny stocks, I was doing options trading. And let me tell you, I took a loss in options, bro. Whew, I really shouldn't have started in options without a true strategy in the stock market itself, just trading regular securities. I took a loss. I think it was like maybe 5 to 10,000 or something like that. But after that, and this was while I was still in school, not really working or anything. It was a $10,000 loss, and I was like, I just had to stare at the wall for a minute and just really recollect myself, because sometimes the pan is hot and you end up, it's almost like having an ungreased pan with meat. The meat sticks and it don't feel good when you're just stuck on a hot pan. And seeing that decrease in my account so quickly, it was my first time ever taking a loss that big in options. I almost gave up for real. And so I said, okay, I need to figure out why I have a knot this big on the side of my head. And I switched over to just trading the regular securities because in my mind, I was like, okay, something I'm not understanding about how this money or how the people that are moving this money are making their decisions. I need to go in depth, look at the statistics, take some more trades, because at that point, I mean, I really didn't have a backlog of trades. You know, like when you get to like 1,000 trades, 2,000 trades, 3,000 trades, you're like, okay, I can use these statistics. But if you've only taken 50 trades, it's not a good synopsis of how your strategy is doing. And also you have to take into consideration the market is always ever changing. There are ebbs and flows, ups and downs. So sometimes that strategy that is great gets you blown up, and sometimes that strategy that's great does well and pays you very good. Uh, and so when I switched over to the stock market, I was like, okay, let me go and I played with the mid caps, played with the large caps, came on down to the penny stocks, and I was like, you know, people always say this and that about penny stocks, but I want to know why some people are able to make good profit out of this thing, and what is it that is separating them from the rest of the people. Why I see these people in chat rooms, they're doing all this stuff, but there are people that don't have anything. They're looking out here in the market and they understand the mindset of the people in the market. They know how to chase the sheep and how to push the sheep. And so that was one of the things that I really just had to take into myself. What's wrong with my idea? What's wrong with my so-called solution to the problem that is making money in the market? But next, somebody else.
Yeah, I just want to piggyback off of that, how you talked about how many entries you've hopped into. And I think a lot of young traders or investors, period, they talk about, I've done it for a couple days, or I've been into a few entries. And you really don't know the market until you close to at least, I would say, anywhere from 500 to 1,000 entries to really, get yourself grounded in entries and hopping into the market. You know what I mean? And knowing your lot size and knowing your proper leverage. Like the first times I was trading, I would hop into maybe 1 or 2 entries, every couple days, you know what I mean? And we'll be scared to really like risk any money, you know what I mean? And we all take, big wins and big losses in the market. And some of us, are starting off small. So we take small wins and small losses. But the point that I'm making is like the more entries you hop into is helping you create your habits, you know what I mean? Your investment habits. And so, what's a good entry from your confirmations because you've done it repetitively and you've gotten results from it. You won't know that until you've done it a certain amount of times.
True. And I think one thing that I would tell anybody is understand your own personal numbers. Don't be going off somebody else's statistics, somebody else's strategy. If you're going to believe in something that you're creating, because as traders, we create something that may have been done before, but in our mindset that aligns with our triggers for our executions is what we're looking for. There are thousands of strategies out there. You got all kinds, gap and goes, you got dip and rips, and all these different types of things that are there. But what is your analysis of your own performance? It's almost like seeing mileage on a vehicle. How many miles do you get per gallon, right? How do you feel when you're at half a tank? How do you feel when you're on empty? How do you feel when you're at a full tank? Do you know when you need to hit the pedal, when you need to hit the brake? All that stuff just kind of falls in on each other,
So that was a wonderful lesson by the both of you. Very, very well put. What have you traded this week? Let's talk about that.
Yes, I took 2 trades this week. Both of them were penny stock trades. I was just looking for a small scalp, and I set my stop loss. I was like, okay, if it hits this stop, whatever. If it gets above my break even, I'll just work my stop up. So I took a trade on BTCM on Tuesday. It did end up stopping me out. I was okay. I mean, it was like a $60 loss on 2,000 shares, and I'm like, that's a 3-cent loss basically. And the same thing for today. I traded a stock called.
Now, this one today I'm mad at you about because I was on the
Yes,
phone with you
man.
when you
I
took
was
the
in the
trade.
profit. I was up 150, and I looked at the profit. I was like, should I take this off the table? And I was like, no, I'm just gonna let it wait. I'm just gonna say, hey, if it hits my stop, it hits my stop. and it came down, hit my stop from the $150. I was like, whatever. I lost. It was a little bit of slippage off the stop loss because I put my stop loss at break even, but it was a 3 cent dip off there off the 10,000 shares. So I mean, not 10,000, 2,000 shares, which is a $60 loss. And I was like, it happens.
Why didn't you lock in profit though?
I don't know, man.
You are known in our community as the stingiest trader there is. Like you always usually have stop losses in the profit. Like you don't even like to let trades go red.
I know,
like
man.
what happened today? Was it Friday? The Friday blues, man.
What I think it was is I usually do not trade anything under $2. I pretty much just give me a $10 stock, $8 stock, whatever, something that can give me big range. And my expectation was heavier than what the stock could do. My expectation for that stock was $1 and something. I was like, man, it's cheap. I'm
You
gonna jump
broke
in
your rule.
2,000 and I'm
You
gonna
broke
see
your
this thing can
rule.
rip.
You
And
broke
so,
your rule.
yeah,
That's your own rule that you just said. The
exactly.
$2 rule,
I
and you
saw it
broke
today.
it.
I was like, and the other thing is, I got a couple of rules that I actually try to follow that I have written. And that's another thing, journaling your rules, being able to read over your rules and things. I actually looked at the rules and I was like, you know what? I think I got this. Now I was right in the initial entry. As soon as I hit the button, I was up $130. I mean, it was just straight up. But
I
I
know.
was
And you
wrong
were
in the
like,
fact
oh.
that it would continue. That was the thing.
Yeah, you got greedy. I was sitting right
Yeah,
there on the
man.
phone with you. You're like, oh, I'm up $150. I'm like, it's 5 seconds. Lock it in. Take that profit. It's a Friday. Call it a day. And you're like,
Exactly.
you're, it's looking like it could go either way, but I'm just going. Blah, 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 blah. You sit there and broke your damn rule. That's what you get. That's an expensive lesson.
Well, it would have been a lot more expensive because, like I said, my expectation was heavier than the stop. As soon as I got out, as soon as it hit my stop, guess what it did? It went into a halt to the downside.
Woo.
And not only did it go to a halt, so my entry was 175 with 2,000 shares. It went into the halt to the downside at 150. That's a 25-cent drop. That's about a $500 loss. And then when it opened up around 140, 130. So that would have been overall a $700 loss. But I had my stop in place at break even. I got 3 cents of slippage, which was $60. I'll take $60 of slippage if I can avoid a $700 loss. You feel me?
Well, right. That's like we got the stop losses and take profits. These are the rules. You got to follow them. Laszlo unfortunately went to sleep on his Bitcoin without a stop loss. Well, see, here's the thing though
I
with
do not
Binance.
believe trading without a stop loss.
I
I
know.
don't trade. A lot of times, I don't trade without a stop loss. Like I really don't, and it served me good sometimes. And what I've learned too as well, not to cut you off, Ben, but like not mirroring a trade. We have this
Yes.
rule. Me and my mentor is called 3 invalidations. 3 invalidations is basically like our stop loss. Like if it invalidates, like our entries are so good, we catch so many really good wicks because we're patient. If it invalidates 3 times, that's just a bad trade. You know what I mean? We don't think of it like, we did anything wrong. We don't need, we don't go and hope,
What
and be
are
like,
the invalidations? Can you go into that? That's like a
yeah.
vague term. I'm curious to what they are.
Yeah, so an invalidation could be basically like if we're trying to make $100, then we break down our invalidation on half of that. So if it goes basically $150 in the negative, we like the trade is not valuable anymore. See what I'm saying? It's not worth our time anymore. So we just cut the trade completely because it's like even if it goes to our first TP, it's already invalidated 3 times. That's a lot of momentum that it afforded just to go back to TP. We like to make sure that we keep our trades at a good risk to reward. So then that way when we catch...
Wait, what's TP? Is toilet paper?
No, take profit.
Target profit.
Yeah.
Taking profit. See, remember the other episode where I was saying when you're trying to explain to new traders and stuff?
Yeah.
Like, I'm an old trader, and I didn't even realize you were talking. Like, I was still trying to figure out the invalidation thing, but then you said
Yeah.
TP, and I was like, TP?
Yeah,
So when you're public speaking,
for the newer traders,
some people like me, I'm real dumb. I need it broken down.
Yeah, absolutely. So what we like to say is take profit or TP and stop loss or SL, right? So for a stop loss, or 3 invalidations is kind of like the same thing. When traders talks about making their stop loss to break even, it's basically back to your entry once you're in profit, right? And so for us, we really try to focus in on, you know, hopping into good entries that are, you know, hopping into profit soon. So then that way, you know, I don't really need to have that much slippage as HHTRADER talks about. His $60 slippage is basically this is equivalent to my 3 invalidations. See what I'm saying? And so like that's why I try to focus on not really, you know, focusing on stop loss, because that can really get you into a bad habit of thinking that like your trade is always going to have some type of slippage, because sometimes you can get to a point where your entries, going back to what I say before, which is 70 and 30, which is basically like your support and resistance within the market, or your floor and your ceiling per se. And so like I try to make sure that I hop into my entries at the floor or the ceiling, so then that way I don't have to deal with extra slippage.
Exact. Well, and the thing with what I was talking about slippage, my stop loss was at break even, right? So
Mm-hmm.
it should have been zeroed out. If it was an instantaneous out, I would have been
Mm-hmm.
out 0-0. But the slippage is just that's up to the broker, you know, the broker speed. So I'm okay
Mm-hmm.
with taking that slippage rather than being caught in a flush. What a flush
Right.
is where it can jump over your stop loss, and you end up you might end up eating a 20-cent loss, you know, 30-cent loss
Mm.
on a flush.
Okay.
Yeah.
Yeah.
Okay.
Yeah,
So
the
yeah,
market
I'm not
makers are
talking about. I
tricky.
know what you're talking about. And the thing is, with my stop losses, how I think about them is if my stop loss gets hit, it wasn't a good trade. If I'm going
Exactly.
long, and I usually go long, if my stop loss gets hit, it wasn't a good trade. If I am
Exactly.
so scared of my stop loss getting hit, it's not a good trade. You know?
Exactly. You never marry a trade, and it's funny that you like it still
Wait, I
correlates.
want to stop you right there. You never marry a trade, and
Yep.
you also always wear a condom. That's your
Yep.
stop loss. It's
Yep.
not there to keep you from not doing something bad. It's there to protect you,
Yep.
right? You need
Yep.
that
That's
stop
the
loss
three
as this extra
invalidations.
protection. But you know that's just in the back of your mind during the action. You don't really realize it's there, but that's how you need to be thinking of it
I
as.
guess I guess you could think about it more like an insurance policy. Like I
Yeah.
Okay,
paid
that's a
insurance,
better metaphor.
I paid $60 worth of insurance to keep me from losing $700. I,
Right. I
you know
took
what I'm
a.
saying? I put
I
in a
have a
stop
hundred.
loss.
Right.
You know,
Right.
go ahead,
No, no,
Terrell.
I was gonna say I agree. I agree because, you know, especially when I'm thinking about a $500 or $1,000 trade, I will take $150 insurance policy of an invalidation to make my $500 to $1,000 in that entry. See what I'm saying?
Mhm.
So that's basically in correlation. You know what I mean? Like, okay, you know, $150. That's like, okay, I could hop out, get into a better entry, and make sure that that way I can get a better risk to reward to the
Mhm.
upside. You know what I mean? Or
Mhm.
to the downside, depending on, you know, where my entry is. And so that's the thing too that I wanted to talk about as well, is like one thing I realize we all have different trading strategies, but for me, what was big was being able to, you know, short the market and hop into you know, buys as well. And so like I know you guys say that you know, shorting the market is not always good, but you know, I realize
Who
scalping
said
has
that?
you know, I guess Ben kind of, you know, they
I
hinted at
do. Well, in the crypto world, it's not a
yeah,
good thing if you're trying to aim for decentralization. If you're shorting the cryptos that you're wanting to be decentralized, it kind of defeats the purpose of the whole Web3 decentralization,
but
right?
as
In the stock market, it was meant to keep companies in check. When they're a bad company, they're supposed to go out of business. So you short them to help put them out of business and make a profit on it. Like that's how it was originally created. But shorting now, if the big institutions do it, it controls the entire market. So that's why I'm real negative on shorting, not because you can't make money. You can make tons of money shorting,
I
but
don't. I don't think that's.
the other problem is though is you have to have margin, And that's what Laszlo said he was trading with as well, where he took that big loss. Is I'm against margin, and
Yeah.
none of this is financial advice. We're talking about our personal opinions and stuff like this here.
Yeah,
Like
absolutely.
everybody, do your own research, of course. Like, don't just go out and start trading any of the stuff we're talking about. We're just talking. Now I forgot what I was saying. Oh well,
So
because Mr.
I
Triplet
can
came
help
in the
you out.
room. Yeah, go ahead.
All right, so
Triplet scared
with
me.
shorting, especially in the stock market, you have an infinite amount of risk. That's the biggest issue that I have with shorting. I wouldn't say shorting is a bad thing, but you need to be able to accept one, especially if you have to have a margin account, you're trading with somebody else's money. And what does that mean for you? Well, that means that they can liquidate your account. See, me, I trade with my cash. I don't trade with margin. I trade with all the money that I trade with is my money. So if something blows up, I'm like, well, I lost it. I'm not trading somebody else's capital. But when you're trading with a bank or something like that, and you are borrowing money to take a position, they can liquidate you at whatever time they want to. They can send you a margin call. They can fly it straight in your window. You be like, what's going on? Bam, you're out of your position. And now you owe them some kind of crazy amount. You know, ask GameStop. The GameStop folks.
That's what I love so much about me understanding like me investing my own money and understanding margin and free margin. See what I'm saying? Because it's like so many people take risky trades thinking that they're good trades. You know what I mean? And I pride myself on, as I grow my lot size, not even taking that much risky trades, but still being very, very profitable. You know what I mean? And
but those people are taking a lot of those people that are taking risky trades that think they're good trades aren't reading the market for themselves. They're like going on Twitter and seeing, oh, get into GameStop. And like, I know someone who made PK off GameStop, and I also know somebody who lost their house.
Right.
They just paid the person that made 50.
You're right. That's
exactly. And they paid 10 of those people with their house.
And those are the people who I don't like, who, you know, they win one good time. It's kind of like somebody who's like a trick shot player thinking they can go to the league. See what I'm saying? Like, just because you could do, you know, one
other
trick.
people's good calls. Like if you're in a room like this and you take some calls based off some stuff you heard, and then next week you're trying to give financial advice, that shit's crazy.
Right.
You know what's crazy?
Hold on. Tyrell just called all of the retail traders that don't know what they're doing. He called them a bunch of Harlem Globetrotters or like Fan One players.
That's what it seemed like. Like they think that like, yo, I can shoot a half court shot. I deserve to be on the league. Like, no, like that is absolutely false. You know what I mean? Just because you can make one lucky shot consistently, maybe, just still doesn't mean you understand the fundamentals of the sport. And I believe that this really is a sport, man.
Yeah. You know,
it takes skill. It is a sport. I mean, I've gotten sweaty plenty of times. You know what I mean?
I'm telling you, man.
Me too.
Oh, go ahead.
What's that, Laszlo?
No, me too. I didn't stop trading when I had this big loss. I still kept on trading when XRP and had a bunch of good trades, and I actually just finished because when FTX broke down, I actually thought, okay, it's not going to be another 6 months bear market for crypto, definitely, because when the Beerman Brothers broke down, it also took another 6 months till the stock market was down. So this is my solution, and maybe it started 6 months again or 4 months again, but right now, for me, the market is too volatile to actually trade.
That's you can't, you know what's funny, bro? I used to say the same thing about crypto. I swear on my life, when I was trading Forex, and this is a funny lesson that everybody can learn from, right? Like when I was trading Forex, I used to be like 50 pips is all I need. 50 pips is all I need, right? And then someone like told me about crypto, and I got into this company called Global Exchange, right? Like the good thing is Global Exchange is no more, but the value and the knowledge I learned about trading crypto lives forever. See what I'm saying? And so like you really gotta like tap into like when the market is volatile, what type of trends and what type of consistency does it have, even in this like weirdness and in this consolidation. You know what I mean? Like this is the best time for you to really learn within the market, but be patient on your entry, so then that way you can get the best risk to reward in the market. Like when it's in a consolidation or less volatile, that's when it's at its most like you don't really know what to do. You know what I mean? But if it's tanking and the dollar is like affecting the market, then I think that you should really like obviously do your own research, but really understand a certain pair and master that pair.
Yeah, but to learn, I can actually use a demo account and trade with virtual money. But this doesn't work for me actually. With too risky with virtual money. But you don't need to. I mean, it's just volatile, and if you go in, you have to watch the market the whole day. I've got a little kid, and I want to build something and get social again and start a new life. Actually, something like that. So there's no time for me for trading right now.
This is why I constantly say this right here. You don't want trading to be a 24-hour thing. If you're a day trader, you want it to be an hour, 2-hour thing, and then you're done for the day.
Exactly.
Like that's it. Like you will mentally burn yourself out looking at charts 24/7. I have done it until my eyes have bled. Like it's not fun. It's a lot better to understand your strategy, go in, take your ATM deposit, and get out.
Exactly.
Go about the rest of your day.
That's just like today. When me and Ben were on, I was on the phone with him, and I was like, "Yo, I'm finna make $100," because I saw a setup that I like, and I've seen that setup multiple times. And I'm like, okay, this is me right here.
Why don't you pull up that trade? Share your screen and pull up the trade and actually show some technical analysis. We've been talking a lot of, kind of, I don't know, it's kind of fundamentals, but just like trading psychology and that type of stuff. But let's get into some actual technical analysis. Like there's so much technical analysis and indicators out there. So many.
Of course, I've been watching the SPY like a hawk. Just watching it do its thing over the last. Well, I guess I started my big thing was this big rip after COVID. I wanted to see some actual trading happen, and you can kind of see how the formation changed from this big rip from COVID all the way up here to the 479s to where now we can actually see actual waves forming, actual wave formations. And if Rooster jumps on here, y'all are gonna learn all about wave formations. But today I was trading a penny stock called LYT here, and this penny stock today was getting some crazy movement. I just usually I play above $2, like I was telling y'all now earlier. This one didn't meet all the criteria. I was just greedy. I was right, but I believe that because I didn't follow my rules, I was willing to break more rules. That's what I believe what happened today.
Well, you set the tone for yourself.
Exactly. I was like, yeah, I broke one, and then they just started coming in. But anyway, let's go over here to my other.
Sorry, how is it called? This stock?
Wait,
how is it called?
What'd you say?
How is the stock called?
The stock was LYT. LYT.
Okay.
It had 94 million shares traded on today, right?
And remember, this is a trash can stock. These are the trash can penny stocks that acquired.
So let me jump over here to here. LYT over here. I use Charles Schwab's Street Smart Edge for trading. And I saw LYT rip. It ripped this in the morning time, and I was like, okay, LYT doing a little something. And I really didn't pay it too much mind. I really wasn't watching the market too heavy today, but I came in and I saw it just start holding right here under the $2 level, around 175. I was like, if this was a higher price stock, usually $0.25 levels hold very well. But that was my mistake. This isn't a higher price stock. This was $1.20, $1.75 stock. And so already, like Fresh was saying, I set the tone, having the expectation of a higher price stock on a low price stock. And so I got in here at 175 with 2,000 shares right here. And I saw this little buying pressure under the bottoms of these candles. I was like, okay, dope. I'm gonna get in here 175. So I put my stop out, my first stop out. I was like, okay, I'm just going to play off the 160. I risked 10 cents on this 2,000 shares. That's $200. And then it started kind of getting shaky. And two things that I always watch is level twos, and I watch how the actual candle formation is happening, how much pressure is to the upside or downside when it comes to buying and selling. And so, I mean, even though this is a low price stock, it still works. The analysis still works. And so when I saw it playing around the 175, I'm like, okay, either it's gonna go or it's gonna fail. And so I was at 160, risking 10 cents, and I kind of was feeling, I was feeling bad because I had already broke a rule. I said, you know what? I'm gonna go ahead and bump my stop up to 170, to risk only 5 cents on 2,000 shares, which is about, was it whatever it is, 5 cents on 2,000 shares is
100.
yeah, $100.
Look
So
at
I
that.
was like, I was
That's
kind of
pretty
scared
good.
because I had already broke a rule, and then it started going. It started getting up here to the 185s almost immediately, and I was up 10 cents on that 200 or 2,000 shares, so it was pretty nice. But it started getting finicky on the level twos, and I was like, okay, this is not a good sign. So I went ahead and moved it all the way up to break even, which was the 175, and I was like, either this thing is gonna break out over $2 or it's gonna come down. And it came down and stopped me at my break even. But like I said, with the slippage, I got a 3 cent slippage on there, which was $60.
So if
And
you left it alone, you would have made 2 cents.
if I left it alone, what you mean?
Like if you left your stop at 170 instead of changing it to 175, you would have made 2 cents.
No, I would have lost a lot more if I left it at 170. So think about this. I was already, my entry was 175. It got up here to 185. I took no profit off because I was expecting a break over this $2. So a break over the $2 from 175, that's 25 cents on 2,000 shares. That's pretty nice. But because of my greed and my fear of breaking that first rule, I moved my stop up because I didn't trust myself. And if I don't trust the trade anymore, I usually start eking that stop up closer and closer to.
Yeah.
I'm like, I'm not about to play this because I've already broken a rule. And so if I did not move that up and I left it at 170, I would have got caught in this full flush. This flush gap, and it halted at 150 something, and then opened up and just was not acting right. I would have been down about $500. But I was like, you know what? If I break a rule, I need to steal. Just because I broke a rule does not mean I cannot actively manage the risk. You know, you may break a rule and enter a trade, but guess what? You can still do something while you're in that trade. And I just took action while I was in the trade to move that stop up instead of just being like, oh my gosh, let me just hold this. You know what I mean? I'm still actively doing something.
What's that indicator, that line you got on your screen there?
That is the VWAP. That is the volume weighted average price. I use the VWAP as, I usually call it the stupid line, right? And this stupid line got me today, right? Because where did I buy? The set literally right on it. I was like, either this thing's gonna hold up or it's not. And I put my stop in there and I was like, let me see what's gonna happen. Usually what I'm looking for is for the price action to pull away from the volume weighted average price to the downside. I want to see the shorts win. That's my first step. Are the shorts winning? How big are they winning? What's going on? And actually, I got my rules over here. Are they pulled up? They're on my desktop. Low float. So these are the rules that I usually follow with this penny stock trading here. Questions that I ask myself, you know, things that I just need to know before I enter the trade. And I can actually tell you which pre-trade questions that I broke here today. One, what is the average range of the stock? This range was pitiful. The range was chopping around maybe like 15 cents, 20 cents. Usually the stocks that I'm trading, they're going around 50 cents, 80 cents, and I can get in and get a nice rip, a nice clean rip, 50, 60 cents. But this one, like I said, it's a lower price stock and it didn't have the range. That's already a rule broken right there. Next thing, is it a top 10 volume mover? It was a top 10 volume mover, but it had a lot of competition on the day, and which is another thing that's down here. What is the competition on the day? The competition on the day was this kid right here, Cosm. This kid right here was ripping into the aftermarket, ripped from 350 all the way up here and took all. Look at this. You can actually look at the volume right here. Just
Yeah, that volume
Wow.
profile is
crazy,
nasty.
crazy volume.
No volume to big buying. Can you mute for just a second? Somebody sounds like they got a dryer going or something. I want to see who it is, so if we can figure it out.
Okay.
Oh no, it's Laszlo. Laszlo, I don't know if you're outside or something, but yeah. If you're not speaking, if you could please keep it muted because that noise is. All right. I was
Yeah,
wondering.
I'm sorry, it was
I
my
thought it was
headset.
you, H. Yeah, no worries, man. I thought it was H. I just wanted to make sure it wasn't him that's got a dryer going, or if he's running a bath while he's doing his technical analysis. Some people
oh
need to
no,
relax.
no,
I
no,
wasn't
man.
judging. I was just wanting to make sure, man. I
Y'all not
didn't
gonna
want you
get that type
grounded,
of
man.
show today. Anyway, so yeah, Cosm was the actual Cosm did nothing at the beginning of the day, just going flat, and then all of a sudden started ripping. And this is the thing with penny stocks. Penny stocks operate on fear, greed, and basically fear, greed, and the rumors. That's what penny stocks pretty much rip on. And for the most part, I'm okay. I'm willing to trade a rumor because I know that I want to take profit and I know how to manage my risk and get out. I don't like Terrell said, don't fall in love with a stock because most of the time in penny stocks, you're trading a rumor. And the
So is that
rumor
more like
has
a
it
scalp?
that you can lose all your money.
Hey, is that more of a scalp type of mentality? You know what I
Yes.
mean? Okay.
Yes. My
Okay, that makes sense.
the trade today, when I called Ben and I told him, hey, I'm about to make $100. Ben, I wasn't in that trade, what, 2 minutes? It was like,
Yeah, it wasn't over 5 minutes.
yeah,
That's
and
why
I
when
was
he was
up
up in 15
150.
seconds, I was going, "Why are you not locking in? You just made that
Mm-hmm.
much in 15
Mm-hmm.
seconds."
That makes sense. Like I think as you know, me and my mentor were just talking about that too. Like, as I mature, I used to be like a reversal trader, similar to like, where you basically catch the trend right before it breaks to
Mhm.
the upside. You know what I mean? And again, waiting in Forex, being a reversal trader used to take days, which feels like forever in trading. I mean, sometimes weeks, you know what I mean? Trying to get that good breakout. And I used to be like, I hate this. I'm missing out on so much profit or so many pips or whatever. So, but I've learned to like think on both sides. So, me hearing you talk about basically scalping, like I said, I definitely want to dive deeper into penny stocks, and like hearing your points of view and psychology on it makes a lot of sense.
Mhm.
So hold on. It's not just penny stocks. These rules apply for everything. Anything you
Okay.
can
Okay.
trade, it's all supply and demand. That's all these candles represent. Those
I guess
candles were created by a Japanese man 7,000 years ago to measure the rice price commodities and other food commodities. They didn't have any VWAPs, they didn't have any Fibonacci's, they didn't have none of that. They just had straight candles because those candles represent nothing but supply and demand. That's it. Just buyers
Right.
and sellers.
but
And shorters are technically buyers and sellers. It's when buyers become sellers, when do sellers become buyers. And it's all psychology. Doesn't matter if it's penny stocks, doesn't matter if it's cryptos. Your trading strategy can be the same all the way across. They're just what would I call them? Vessels for value.
yes.
That's it.
And one thing that I know Ben was saying that it does work across the board. The only difference is the actual. It's almost like when you invest in crypto, and at the beginning of crypto, there was so many people that were doing blind investments. They heard about a rumor, and they
Mm-hmm.
were treating cryptos like penny stocks. They were trading rumors. But when I got into cryptos, I was looking at the actual project. I want to know, are you creating a value for that will affect people's lives, right? And when I looked into that, I got into crypto that not only we're saying, oh yeah, we're just a big hype thing, we're like a GameStop. I want to know, hey, what are you doing in your project that I can see a timeline see, I can go and read your white papers and be like, okay, this is a project that needs my money or needs my involvement, whichever one that I, decide. That's what I'm looking for in the crypto space. I'm like,
Right.
okay,
But
I'm
that's a
not trying to
different
trade a
thing.
rumor there.
Yeah, that's a different thing for you for crypto because you're not taking the scalper mentality that you take on the penny stocks. You're actually taking a whole different mentality.
Yeah,
Yeah,
and
I'm
do you mean by investing as in hodling the coin or as day trading the actual price
No, I'm
action
talking
stuff?
about holding the coin. I got
Okay.
plenty of coin. Like I'm like with crypto, I swing trade.
See,
Actually,
it
I
was a
wouldn't call it
different.
swing trade. I would call it a long-term investment.
Yeah, right. Well,
Yeah,
but
you
technically
don't
it is
really
swing
swing.
trading though, because I always tell my mentor there's investors got entries up there, meaning like there's people who are in at higher pricing and they're just waiting for the right price to basically reach their buying entry. You know what I mean? So that's gonna
So,
drive the liquidity up.
so like
You,
on
you know
BLP,
what the difference? Oh, you know the difference between a day trader, a swing trader, and a long-term investor is?
time.
That's it. Just
Yeah,
time. It's
yeah,
still you're still holding something to make money off of it later or make something later. Like that's all it is just time. How long are you
yeah,
willing to hold it? Like
yeah.
I laugh a lot because people say I'm just a day trader and like,
Right.
well, no, you'll turn into a swing trader if that stock keeps ripping all the way through after hours or if that crypto's on a
But
big
they
bull
get
run.
scared because they don't want to be that. They don't want to wait. Like I hear y'all like hearing what I hear within a 2-minute trade. To me, I'll just be like a 2-minute trade. You know what I mean? But
Yeah.
if if I lose $500 in 13 seconds, that's a big like. You know what I mean? You're gonna question if you want to hold that entry. So it just funny how like again going back to your psychology of it, like of taking profit and stop loss is very vital when you're dealing with money at faster time frames.
Exactly. And another thing is, you was talking about the whole $500 in 2 seconds or whatnot. I had already, before I made this bad decision to trade whatever LYT, I had already purposed in my mind, I'm not going to give up more than $100 to this stock. I had already set that line in the sand. There will not be over $100 loss here. And so my stop loss started where $100 was, and it will be moved up from there. That's why the loss was only $60 because I was moving up the whole time while it was trying to figure out because I'm like this. I know that my trade's going to be fast. If you can't give me what I want to see in the amount of time that I'm used to seeing it, I'm out.
Right,
We good. I'll
right.
go for a walk.
Right. I kind of felt like that with Bitcoin and like trading as well. It's like if it's not bussing within like a half an hour, then I'm just hopping out. See what I'm saying? Because I feel like, at that time it created enough like of momentum. Like I might hold it for an hour at most just to see like how the next candle open. But like if it's not doing what I like, I'm hopping out. You know what I mean? Like, like I said, don't marry a trade.
Here's a good question. Why is H only waiting 2 seconds on that penny stock he's talking about, and why are you having to wait 30 minutes on Bitcoin?
Because with me hopping into a brokerage where it's like it's only 60 cent to hop into Bitcoin at 0.1 or like at most paying a couple dollars, his leverage is more and he's able to make money faster, while for me I would have to hold longer to make the same amount of money in the same time frame. You know what I mean? So depending on how much he's willing to risk per lot size or per I would say per stock for that is going to dictate how long he's willing to hold the actual trade for.
Yes and no. That's almost there. But the reason that I like this trade and the reason that I trade low floats is because of the range of the stock.
The range of the stock.
The
Okay.
range of the stock. So let's just look at this right here. We can see this in the morning went from 90 cents all the way up here to $2.28. That is what, $1 and something, right? So I know for me, I don't need $1. I just want to see that you have the ability to do $1. I'm looking for 10
Mm,
cents. I'm looking for 20 cents. I just
mhm.
want to see your ability to provide what I'm looking for.
Okay, that makes sense.
You know what I'm saying? So when
Yes.
it came back down to 175, I'm not, well, over here, when it came back to 175, I'm not looking to get back up to $2. All I want is you to give me 10 cents. I'm not, my profit target is not something that everybody can see. My profit target is off the charts. It's like, it's not something that they can look at the level twos and be like, oh, there's a lot of people trying to get 10 cents per trade. No, no. So
Right.
they can't see my shares out there. I don't have a size out there. In my head, I'm like, when I see 10 cents, I'm out.
That makes sense. You're scalping it for a less TP instead of getting a TP3. You just taking your TP1 and
Yeah,
saying, you know what I mean. I live to fight another day. You know what I mean. While
exactly.
other people hodl their TPs. Oh, it's supposed to go to TP3, and then they reverse on you on your entry.
So
Exactly.
I want to get back to H's holding his crypto because it's totally different than what he's been saying about this. But first, the question I ask, you guys were all over the answer I was looking for. You were all over it. The time, like we just talked about, is the difference. And H is making a good point. You know, it's a lot quicker to do, like you're saying, one. I don't call them really TP. I call it risk to reward ratio, and like one. I guess 1 to 1 would be 1.2 to me or whatever. But
Mhm.
it's the time and the amount of money it takes to move Bitcoin versus a time and amount of money it takes to move a penny stock. And I'm not saying go one way or another. I'm just saying when you're analyzing these candlestick charts, part of the the analyzation is actually time of those candles. So when you got the volume, you know what the supply and demand is, you know the buying and seller pressure, but you also know that time. So Bitcoin takes a lot longer because it's 20 something $1,000. Takes a lot of money to move Bitcoin, and that's why it'll take 30 minutes to build up for a rip. It doesn't take that much money to move that penny stock.
Well,
Same
that's
thing
what we
with
were
these
talking about the other day when Bitcoin started pumping, right? Like, we were all talking about Bitcoin, but like Ben was talking about like things that move
Mer-
when Bitcoins move,
yeah,
Mm-hmm.
so that
It appears.
because there's way more profit in that than catching whatever it is on Bitcoin.
Mhm.
So the trade I took, I've only taken one trade this week, and I entered it last week. It was Mara, Mara, and it is a Bitcoin miner in the Nasdaq.
Yep.
And when I saw Bitcoin start popping, it was at $5. I got in it, and I held it as long as Bitcoin was moving,
Yep.
and it
It's
ran all.
still
What did it run? It was
it's up at
yeah.
807 right now. Right
I
here.
already locked out when it hit that peak and started pivoting back down. As soon as I started seeing red, I locked it out. That's what I'm saying. I ain't holding. Once
Yeah.
I held because Bitcoin was running. That was it. But I had a $5 entry on something that moved, from $5 to 8 something, right? And that's a whole $3 rip. Now the time took as much as it took Bitcoin to rip, right? So that's what I'm saying. Like the time, that's one of the most important things when you're analyzing, because not only is time is your most valuable asset, but those candles are showing you the time it's taking for buyers and sellers to build that position and when that rip is going to be. So like we're not going to see Bitcoin probably shoot from 25,000 to 50,000 in one day. Not anymore, where we have BlackRock and Grayscale and all these other futures brokers out there offering all this margin and leverage on them. Like they're going to be, tons of shorters in Bitcoin and stuff like that, just like there
So
is in the penny stocks. But
so
the time is, I just want to make it real important how important time is. Like in so many different aspects of your life and in trading, time is something you got to study very closely.
And
So Ben, real quick, I just had a question. Like when it comes to like entry, like and HHTRADER, you can kind of piggyback off of this too. Like I look for a daily or a 4-hour entry. So you guys are only looking for a 2 minute to
no
15 minute.
sir. No sir.
Okay,
I'm
so
looking
that's what
from
I'm
the
wondering.
daily down. I don't enter any trade without looking at higher time frames.
That's what I'm saying. Like, how do y'all correlate? Like, so of course you look at the
100%.
dollar, right?
So
To
think about this.
mm-hmm.
When you have an hour chart,
Mhm.
the breakouts or breakdowns on an hour chart are more powerful than a lower time frame. So, like, let's say if I'm looking at the
Mhm.
15-minute and I see a breakout on the 15-minute, but I'm looking at the hour and the hour is telling me, man, this thing still wants to go down, but
Mhm.
it's breaking out on a lower time frame. I let everybody else buy their breakout and they get
Right.
destroyed because
Like
the higher
the
time
1
frame.
minute traders. Like you don't even trade, even though you scalp, you don't trade on the 1 minute like all the
No.
other scalpers do.
Yeah. These are my three time frames that I use: the hour, the 30-minute, and the 15-minute. I do my entries on the 15-minute, but I'm looking at the hour and I'm looking at the 30-minute to tell me, hey, what's the real story here? Is this thing
Mhm.
reversing? Is this thing?
Mhm.
I'm not guesstimating on a minute because the minutes
Mhm.
be everywhere.
Mhm. And
You
I
know,
used
when
to
I
hate
first
that.
started trading, I lost so much on just getting faked out on minutes. Something that was reversing, I get
Yeah.
faked out. I get in, I'm like, oh man, this thing is dropping. Let me get out. Then it goes right back up.
I
Or if
used to
go
I
ahead.
used to have the opposite mentality. I used to think I had all the liquidity in the world, where I look on a bigger time frame, on like the monthly or the weekly, and think that I can hold a trade that long. And it only taught me, like, yo, Tyler, you got to take it day by day. That's why I
Mhm.
started looking at smaller time frames of the daily and the 4 hour to say, okay, can I hold this trade for the next 8 hours? Can I hold this trade for the next day? And then once I'm deeper in profit, then I can look at the weekly to tell me if this is a long-term trade. You know what I mean? Like, but
Well,
Exactly.
again, though, it comes down to the time. If we're
mm-hmm,
talking about the Nasdaq that's been around for 80 years or whatever, you have a whole lot more candles. If you look at a daily on that, it's going to look choppy like the minute does for a penny stock right now on a daily chart. So on those
mm,
type of commodities and things like that, gold and silver, you actually do want to look at the higher time frame, the monthly or weekly, because there's a lot more period of time that's transpired of different buys and sells. This is
right,
the same I always say, the higher the time or the longer the time frame, the stronger the support and resistance, the
right.
stronger whatever else, your indicators and all that. Like a 200-day moving average on a 1 minute chart is not going to mean anything.
And
200-day moving average, you can compare this on Bitcoin, the NASDAQ, down to a penny stock on a daily or weekly. You're going to see those candles bounce off of that thing a lot because that's such a
Wow.
stronger, the longer the time frame, the stronger the time frame. That's a good
and
way to remember it.
and I guess one thing that Ben just touched on there was something that Laszlo touched on too. The He keeps going back to this time thing. If I am a day trader, I'm looking to take a trade within the day. What is the most effective time periods that I need to see during the day to make money? The 4 hour is only going to give me what? If the market opens up at 8:30 and closes at 3 for me on central time, the 4 hour, I'm only going to be looking at what, like 3 or 4 candles. And so it doesn't give me enough representation of what I need to see in the day. I've seen over, and this goes back to what we were talking about earlier, Tyrell, with the amount of trades being taken, how
Exactly.
much, and
How you
I've
back
taken
us?
thousands of trades, and I've seen I do better when I check the hour, then I check the 30-minute, then I check the 15-minute. I see more um, progress, profit, more being right in those than I do when I'm trading other time frames. So you have to find what time frame you have that
Yeah.
fits into the time you want to give to the market. If you're only trading for an hour, that's okay, that's cool. But you need to know what you need to look for and be able to quickly decipher how you need to make money in that hour. You know, sometimes I see people, they be like, yeah, I'm just gonna trade for an hour, I'm just gonna trade for 2 hours. It's like, okay, so you have a strategy for that amount of time that you've set aside. You've taken trades multiple times at that same time every single day and seen what works best for you. That go, somebody else can jump in.
I just want to say this show is really, really good. Like, I've learned a lot from you guys, just hearing you and Ben point of view, because it really correlates, and for me, like, just hearing all of the things that you guys kind of like make sure that you emphasize on, you know, the time, patience, making sure you bring your stop loss to break even, making sure you understand your risk to reward. All of those things are confirmations that you should be doing. It's like when you break your own rules, that's when you realize, you know, the market gets the better of you. You know what I mean? So I just think that this made me a way more sound trader and more curious to get into, you know, things like that, because I feel like the fundamentals of, like you said, looking at a bigger time frame and then scalping in on your entry, making sure that you understand, you know, where the momentum is coming from, knowing your support and resistance is all really, really good fundamentals to know in the trading community.
Yeah, we appreciate that, man. And we don't know all the answers. We're students too. Like we're students till the day we die. We're learning as we're talking as well. Like we have debates about this all the time.
I love it.
Fresh, Rooster. I'm trying to see where Rooster's at. He's supposed to be joining us here soon. Because he's gonna, like H said, he's gonna have a whole rant about technical analysis, I'm sure. That boy, I can't get it.
Rooster is definitely a pattern. He's a pattern monster. He loves patterns. He loves using all the different, you know. But one thing about penny stocks is they don't care about the pattern. They don't care about anything but what the people are feeling in that moment, or what kind of manipulation that the institutions want to do. That's all. You could be, it could be a perfect setup. You could say this is what I need to be in, and then all of a sudden you caught in a halt. Like today, I dodged a halt because I had a stop loss in. Like the second after it hit my stop loss, it was in a halt down.
But you weren't really looking at a pattern, though, right? You were looking at just your dumb line, as you call the VWAP.
Yes.
What'd you call the stupid line?
Yeah,
or like the RSI. But is that like basically like a RSI kind of in a way?
No. So it basically takes all the VWAP takes all the trades that have happened on the day and averages them. So if it's trading above the VWAP, will incrementally move upwards. If it's trading below the VWAP, it will incrementally move downwards. But what I'm looking for, my usual trades, is I want to see deviations away from the VWAP, whether up or down.
Pullbacks.
You could call them pullbacks, but I mean, pullbacks can happen anywhere. Pullbacks can happen. Like, look out here on the spot at this 15-minute right here. This pullback right here happened above VWAP. You see the VWAP? So what I'm looking for is something to come below the VWAP, where people are like, okay, this price range is below where everybody else might have bought. So let's say you bought up here on this first count of the SPY. It got up here to, what is this, the 393, and dropped down to the 388. Well, would you be better off if you were going into a long position? Would you be better off buying here at the top?
No, at the bottom.
Buying here under VWAP.
Yeah, the wicks.
Exactly. So that's why I look for. And some people, they're like, "Oh, VWAP doesn't work," but I use it as a stupid line. The closer we are to VWAP, the more scared I get.
But can I say something? Like, look how soon as that red candle, I want to say 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15.
It's respecting it, yeah.
Exactly.
It's respecting VWAP. And that's why I'm like, let me buy above VWAP so I can use VWAP as a kind of like a protection for my entry.
Yeah, I like that.
That's how I use it. Buy below to sell, or to for it to hold above.
Exactly.
So,
I like that. Okay.
Tyrell brought up RSI. What's your thoughts on RSI? Because I'm gonna go off on a rant when we start talking about these other indicators.
When I was doing mid cap trading, but I'm just so, like, for real, if I take the VWAP off, I can trade without VWAP. If I just don't see VWAP, it's just RSI, and I don't like over complicating trading. And
I agree.
What I do for the scalping that I do, I don't need that tool, so I don't use that tool. You know what I mean? If I found some strategy that I was like, okay, I've locked this strategy in, I've traded 3,000 times, and this works when I see this on RSI, then I'd be more inclined. But my statistics just don't say that I need it.
You know what's funny, bro? I've been through so many journeys of like using different indicators and thinking that, I needed this indicator, I needed this indicator to be a better trader. Like I used to be Bollinger Bands king. Like you couldn't tell me I didn't need the Bollinger Bands on my damn chart. See what I'm saying? Like I will fight
No,
somebody.
no, no. We're going
Bro.
to Laszlo. You said Bollinger Band King. Laszlo, what's up? We're Tyrell. Quiet for a
No,
second.
no. What I actually, for me, is enough for trading for today. I just want to know where is your holdback from the DAO, or is there any more information, or only on founders or something like that?
Oh, if you check in the room chat there, the links to the DAO are at the beginning, or you can just put in DLADAO.org and you'll find our website. But we have tons of, like, we have a Discord, we have the Entre community. Oh, let me drop the Entre community real quick before I forget.
I'm in the Entre community. No, I'm not.
Tyrell got me fired up because he said Bollinger Band King. Oh, I'm such an anti-indicator person. Bollinger Band King. I'm gonna
Yeah,
go
but you
on. I'm
need them.
gonna
You
go
need
on a
key
rant.
indicators. What I want to say. Hold on. The best technical analyst I know actually is the block for Bitcoin. Is the blockchain backer on YouTube. He really makes a Bitcoin analysis, a technical one, is awesome. I mean, it's really off the chart, and he's on time all the time, almost. Just to let
That's
you know.
what. That's awesome. What indicators does he use?
Oh, he uses the chart, he uses pattern, he uses the DXY, he uses just everything, and he doesn't actually tell you to go in or buy something. He just makes a fundamental analysis every day about Bitcoin, just Bitcoin, or XRP too, because big XRP fan.
Hey, that's awesome. That's what we like to hear because, like, nobody, like, none of us who live stream, we don't tell people to buy or sell or where to get in. Like, when we're trading, we're like, don't do what we're doing. Like, you need to be
My
making your
whole
own decisions.
Oh, what I was gonna say, my whole analyst thing, the thing that I do in the mornings live streaming, I don't come into one thing that I used to do is I used to come into live stream with the purpose of taking trades. But I learned better than that. I'm like, one, I need to see a setup that is aligning with my rule set. If that does not happen during the time that I'm live streaming, that's okay. I'd rather not lose money because this is my money. I'm not trading on margin. I'm not trading any kind of crazy stuff. I'm trading my money. So if you see me take a loss, if I take a $600 loss, that's a real $600 loss. And I'm gonna have to find out what shoes I'm gonna sell. If I need to go, hit the corner, whatever. That's a $600 loss out of my pocket. You know what I'm
Right.
saying?
You
Oh, go ahead.
Yeah. Now I just want to say you value your margin when it's your own money, bro. Like I had a debate with my mentor because he got so good that people really trusted him where he could play with, $5,000, $15,000, $20,000, and people like, we don't mind. And I used to tell him like in the beginning, like, your equity is not my equity, your blue screen is not my blue screen. Cause I used to have that comparison game. See what I'm saying? Of like, I think we was talking about that before of just like, when someone else is making 2,000, you only making 200, you get into the psychology that you should be holding your trades more. Maybe if I hold my trades more, I'll make 1,400 and he won't make that much. And so I had to realize, stay on your own screen. Your blue screen is your blue screen. You know what I mean? Like really focus on your own trading plan because you can get sidetracked focusing and having that FOMO of like wanting to make more, wanting to hop into other trades because of other people.
There's a video that's been going around, and Lil Wayne said this a while back, but the videos of Lil Wayne, they ask him about all these other rappers and stuff, and he said, who? I don't know what you're talking about. All I do is just stare in the mirror and look at me. Like, I don't have to, like, if I focus on them, then I won't be able to be me. So that's the same thing with trading. I mean, that's everything in life, but that's when he said that's the first thing I thought of was like, yeah, you got to be your own trader. Yeah, you can't. If you watch what everybody else is doing, you're going to be lost. And by the way, Rooster is now in the room. The pattern god. We've already talked a little bit about Bollinger Bands and RSI. Rooster, go ahead and tell us about all your pile of indicators you got.
Let me say something real quick, and then I'm gonna give it over to Rooster.
No, I say goodbye first. Okay. Thank you very much. It was awesome. Thank you very much.
All
Oh,
right,
that will be. I'll invite you to the community, but it is in the room chat if you just click that link.
Okay, awesome. Okay, awesome. I will definitely join. Thank you very much. Thanks a lot.
right.
Have a good time.
All right. But yeah, the last thing I want to say before Rooster gets on was like Tyrell was saying, being able to not only know your lane, but being able to manipulate your lane will help so much in trading. You know, I did a lot of track run. I've ran track since forever. I mean, actually running, like being on the track, running in a lane. And one of the worst things that you can do while running or sprinting is look at the person beside you. You know what's gonna happen? You're gonna run right into them. It's almost like football. You running up the field trying to tackle somebody. If you're looking at them, the chance that you're gonna hit them is very, very high, because how can you run in any other direction than what you're looking at? And so have a plan behind you of what you're going to do when you get to the location that you're looking at, how you're going, or it's a twofold thing, how you're going to get there and how you're going to allow you getting to your goal affect your emotional state. So let's say like a lot of people, they'll take one trade, they'll make 5,000, they'll make whatever, and make a lot of money, and they get to that goal, but they don't do an analysis of how that affects their emotional state. Or somebody that is starting from the start line, they do so much preparation that they miss their execution. They're like, oh, they do all this. And I remember Ben can tell you, when I first started doing penny stocks, I did that so much preparation, but not being able to hit that buy button, not being able to execute when I got there. And so it's like a twofold journey. When you do get the goal, how do you let that affect your planning and your strategy and how your emotions are? And then if you're not at that goal yet, are you over preparing without even putting your foot in the water? But yeah, definitely pass it over to Reliable there.
Boy, HH is out here like a Baptist preacher in the water, right in the river, just giving out all the sermons. What's up, Richard? What's up, Kyra?
I just want to say, like, damn, y'all, like, I love the energy and like what y'all talking about, because it's so true. Like, and like I said, I don't get to have this perspective with a lot of people. I'm not in tune with a whole bunch of other traders. So like when I'm having these debacles and debate on mentality and not focusing on other traders and not focusing on other people's mentality, like, I think that I used to be crazy, you know what I mean? But hearing you guys talk about it, it's like, that's true, you know what I mean? Like, you cannot focus on other people's results. You got to kind of literally focus on your own results.
Yep, 100%. Let's see. What did you, Fresh, are you in the show? What's going on right now?
Yeah, what? No. There's just nothing else on the stream.
Oh, okay. I didn't know. I was like, it looked like you're in the show. Fresh is like, I'm done with this technical analysis talk. Rooster, you got to be sharing your screen because you're going to be talking all kinds of analysis. You've been live streaming twice a day this whole entire week, nonstop, taking trades like a crazy person. What is going on? Unmute yourself if you haven't found the unmute button yet. You were unmuted when you came in, but you're muted right now. That's a really cool thing you made there, that graphic, though. I like that. Nice job, Fish.
Yeah.
Did you do that why the show's been going on?
Yeah.
You don't need to raise your hand. You just need to unmute. You're already on the stage. He's tired, man. And two streams, 5 days a week.
His set up properly. You might have to leave.
It's not your it's not your mic. It's on Entra. The mute button on Entra is on, Rooster. There you go. You there? Okay. Now you're unmuted on Entra. But maybe your microphone, did you hit it or something? Oh, no, he's gone. Maybe this Entra. Sometimes, we have rug problems. We'll see if he gets back in here.
Yeah, he probably is gonna have to give permission to Entre to use his mic real quick.
Well, it's that or all them patterns and indicators he has up is bogging down his computer, and it's
I was about to say, what? Well, it's funny. Like I said, like indicators used to be such a big topic. Like, oh, I need this indicator, especially coming from a company like, or a program with IML. Like in my beginning
Hello,
stages,
hello.
I used to hate that. Oh, we finally got him back.
Now we can
Okay,
hear you.
got the mic working. Yeah, that
There
was
you
all
go.
good information right there, Hal. I think there's a couple things that you said that really stuck out in terms of your emotions, because it's been a roller coaster couple weeks, like you said, been live streaming. If you guys were tuning in, we've been making all kinds of plays. I could talk for days on that, but I don't want to spend too much of the time with the floor. But one thing that uh, I would say that I've been taking into regard is there's a book. I forget who the author is, but the title of the book is Living in Bets. I want to take as many bets as I possibly can where I think the odds are in my favor, and I live each bet to bet. So in terms of, I think that kind of ties in with emotions, because there's a lot of times when your emotions can get really high, and it can kind of get you taking bets that maybe you aren't in your favor, let's say. So, yeah, it was really good information that you had right there.
We've been talking about, H was talking about taking less trades and Tyrell was talking about less trades. It sounds like you're coming in talking about taking a lot of trades,
Well,
which
I
you had.
think
How many
like
trades have you took this week?
on the year, I think I'm over 1,800 transactions.
Jeez, it's only
What?
January. It's like half the month, bro.
Wait, what?
About
What's your
1,800.
You
what's
know
I
your
what?
win
had
rate on that? What's your win rate on that 1800?
I think it's gonna be tough to say. I gotta say at least north of 90%.
No way, man. North of 90% on 1800.
1,800 trades.
1,800 entries?
1,800 buys and sells.
Okay, yeah.
So
Wow.
basically 900 trades, basically. And the first since the
Well,
first
they
of this
can
month.
be multiple trades. I'm like multiple exits, multiple entries.
Mm-hmm. Mm-hmm. Mm-hmm.
Oh, okay. So we don't.
So what do
And
So
then
you?
that's
I
a
stay
lot.
true to a stop. If it meets my rules that I go by, then I keep myself at risk. I don't think I've had any trades go over 1% of portfolio size. So really not taking a lot of size, but really playing true to my strategy that works for me, and just kind of letting it ride. So the bull market couldn't have come at a better time, but not necessarily a bull market. But this little rally that we've had right now has been quite fun
So
to
You,
participate in.
you should have been in here with Laszlo. Laszlo said it's too volatile. This man taking 1800.
1,800, right? My thing is,
1,800.
how long do you spend on market research? If you're taking 18, like how much is your trades repetitive, and how much is it like just correlated pairs?
It just depends on the setup, I would say. And this is just in my portfolio of Fidelity. This isn't counting any crypto trades whatsoever. But I haven't got to the point where I'm taking a lot of profit on crypto. A lot of the crypto, the way I play that is any fun money that I come across, I want to take good trades, good entries, and I think the outs will come. A lot of it's related to Cosmos ecosystem, so a lot of it's already locked in staking, and until it gets to a point where I think that it could look more volatile to the downside, then I'm not that worried about it. So I mean, good indicators of that. If I were looking at Bitcoin is in the overbought stage. So
Can you
until
share
this
your
cross,
screen so you can show it?
um,
You don't have to share your Discord screen. You should be able to just share your screen on Entra. Should be
okay,
right at the bottom. There you go.
we got a screen
I
here.
see it's connecting.
Yeah, so I
Yeah.
mean, I play everything off of daily chart. The rules are if you're positive, you're good to take a trade. And down here at Bitcoin, here's your entry down here around 17,000. So until this crosses back over negative, I got the bull ears on for crypto. And realistically, probably an EMA sitting right around 20,000, but you just broke day's high or weekly highs, so you're looking at breakout traders right here. If I switch this to a weekly chart, this is just getting into that positive. So the longer time frame that I'm on can give you types of ranges that negative on a weekly chart right here. We switched this to a daily, and it just recently turned into a buy at the beginning and end of last week is when you can start turning your bull ears on, or whatever you want to call it, but you're bullish on the market. Looking for potential support back test to this previous high. We never quite get there. We never break the EMA, and we're looking for a breakout price above this wick. So yes, we've been in the TQ. We've been loading the TQ at end of the week here.
Wait,
And
real quick. What's TQ? I'm sorry. Now I feel like Ben now.
it's like the Nasdaq. It's like the 3 times leverage Nasdaq.
Yeah, you gotta
Right
dumb it down for like me, man. You know, when you tell me a technical analysis the way you do it, it gives me a brain aneurysm
But
every
I mean,
time.
on a day chart, it's telling you we're getting close to going positive. So if we did a replay right here of when we could have took a short, so let's say you were looking to go short on the market. So we'll go run up here, and you're saying, hey, there's a gap fill down here. Let's see if we can short it down to this gap fill. We're getting ready to cross back negative. We're already negative right here. If we take out this wick bottom, we can take an attempt at a short. This is a pretty good example. So now you're saying, okay, if you're in a long position because you go positive right here, you're saying my stop loss is probably underneath this wick. So you're expecting to enter into a short when stop losses are getting ready to kick in. So a little bit of a gap up, you're still positive. You can't take this short yet. Now, boom, you're triggered in negative. You're negative right here. You can try and hit a short. And boom, just like that, getting paid to the money. Now you're down to your gap fill. You flatten out of your position. Now, when we turn back over, let's see if it can hold this support. If we start building this U shape right here, now this gap's filled. Let's see what we have to the upside. Right here, we have our 2080 or 2184 gap. The longs are saying if this can turn positive, this is a potential out up here. So if we keep playing this through, I'm looking to take a long position. I could have held the short and kept getting paid on it first off, but second off, you're getting ready to go positive right here, and boom, you're positive. So one way that I would look for potential entry, one, you're a little disconnected from your EMA. So I take a run, top move, bottom move. I'm looking for entries off this. You can look halfway from current price to that, which is bottom wick. And then I can look for a potential pullback into these 1880s. So take this off. We'll look at another candle. Boom. You're triggered in on a couple orders right there. You're starting to eke negative right here. So you don't really want to have too much size, but you're starting to build that position. We're looking for pullbacks into here. We can take a fill, run a stop loss underneath this. If it starts curling up, we can look at entries to the north side. So there's your fill. And then this is where we're at. We have this gap up. So let's look at today's candle. So you got a couple fills. Where is your entry, which is an entry that we took today, actually. Break of this wick right here. You have confirmed higher low, gap up. Didn't have the strength to come down to the gap. It pushes over top. You could have put orders in at the previous high, as we did have another order here that didn't get filled at 1930 right here. And then you get your extension. You could have took a breakout extension over top of this wick, and now you're playing for a breakout price up to this gap fill, which is what we're currently doing right now. We could have had some outs up at this previous high if we wanted to, but that's just an example of an intraday trade where on a daily chart, it looks like it's getting ready to go positive. Let's go to a 15-minute chart and find where our entry is. This is where we
So
go positive. So we go positive
those
right here.
right there, the indicators you're showing. Can you explain those indicators? I can't. What do you got up there? The ones at the bottom, the two that you're saying we're
They're
looking
just
for the double
commodity
positive.
channel index, and this first one that I have is relative to a 25-day moving average, and this second one is relative to a 50-day moving average. So
Wow, that makes
So both are
sense, bro.
both of them are commodity channel indexes, though.
yep, and then
Okay.
I run a 34 moving average.
A 34.
34. I
Interesting.
never
Well,
go to a chart less than 15 minutes. A 5-minute chart, I do not use this. I don't think it has much regard. So I only look at 15 minutes. I'll look at
yep,
the hour sometimes in a day chart.
yep. That's the
So
same
how long
thing
do
we were
you?
talking about earlier.
Yeah.
Go ahead, Tyler.
No, yeah. No, I just wanted to ask him because like he broke that down really well. See what I'm saying? And the fact of seeing just the reversal and then seeing the breakouts, like in the same concept, it's the same way. Going back to what Ben was saying, like once you understand the fundamentals, it makes it a lot easier for you to see other charts. I don't know anything about that pair, but I've seen him, showing me the downtrend, showing me the reversal, and then the breakout. You know what I mean, or the potential breakout. And so, like, I just think that makes sense. And for Ben to talk about like the indicators too, because I was saying like some indicators I used to kind of cherish, and now I feel like I treat them like a stepchild. You know what I mean? Where I don't even think about them no more. And so I just want to ask you, Rooster, was there a point where you used under indicators before? How has your psychology or your technical analysis has changed over time when it comes to different indicators?
Well, I'd say I've always been big on the commodity channel. Before, I always liked trying to buy the bottom. I really love trying to buy the
Right.
bottom, so I would take the breakout from over top of this area right here at the very beginning when it gets to negative 100. So then you're flirting with it down here, but right here is a shorter's dream is what I came to realize, because all it
Mm-hmm.
takes is for it to roll over, stop losses kick in, and boom, the shorts are instantly getting paid right there. But I was also very big into retracements. So I mean this I don't know if you've ever used fib tools before, but this
Yeah.
is actually where a lot of my early success came from, because my investing days started towards the end of 2019. So uh, quite a drastic change from what I'm used to when the price was up here, and everyone was loving the investing life over here, but I was very big on. So here we have the Nasdaq on big run. So this is a big run to the downside. This is a big run to the upside, and this one metric right here changed my thought process about the whole stock market, and that's comparing this to
Mm,
crypto, is
okay.
because you're close to a full extension. Now let me show you what Bitcoin looks like. So when I see like things that correlate and like make sense to me, like this is a large drop in I went to the wrong thing. US dollar right here. So right here, large drop, large drop. You can take either one of them. This is back in 2014. This is 2017. W pattern. If we just take a full extension right here, you have the same exact pattern that we had with the Nasdaq. And now another trade that I used to take, I used to swing trade and say this is a neckline. So a left leg, a right leg, or a neckline, a right bottom, an extended right leg. So the rules for that is the top of your left leg. So this is your left leg. Your right leg overextends, you're looking for a back test of the neckline. So that was another reason why, it didn't make sense to me for Bitcoin to continue uh, an upward trend when the back test of the neckline is down here. So for the longest time,
Right.
I was preaching 13,000 on Bitcoin. Um, but I mean, there's so many metrics uh, and then I went through a phase of wave structures where this is a 5 wave structure where I can show multiple examples of this. The one that always comes to mind is PHM, Ploop Group Homes, which I do still hold some of this from some of these shares that I bought. But the 702 retracement. So anytime I see a 702 retracement, boom, double top into my 702 retracement. The first thing that comes to my mind is that this is a wave 1, 2, where you then get a crack of this support for a wave 3, or here's your wave 3, and then a back test of the bottom of wave 1 for a final move down. Now all you're looking for is a confirmed higher low, and you can take the trade. So
Yeah.
this was,
A lower low to a higher high.
yeah, so then you're just looking for this reversal, but the big part about the 5 wave structures is that whole 5 wave structure could be a wave 1. And now we're talking about that 5 wave structure turns into a wave 2, which we're coming close to a 702 retracement. Well, then you're looking for a wave 3, a wave 4, and then a final wave 5 to complete your bear market, which also meets down at support. So there's bullish ways that you can look at it that way from, and there's bearish ways as well.
So basically, it could reject it. Support could become resistance, basically, and reject it.
Yeah, I've kind of transitioned away from this. I'm very big on just the momentum. Like When I take a trade, I want the bulls to be in favor of the trade. When if I was looking to short the market, I want these shorts to be in control of the market in a sense. So I want to be on the side where they have control.
So you're doing trend trading. If the trend is downward and it's in the short's favor, that's what you want to see. If the trend is upwards, you trade with the trend, right?
Yeah, in a sense.
I call that like my other mentor Junior, you know, he talks about that a lot too, where he literally just rides with the banks, you know what I mean? But like he has like so much liquidity where like he's making 157,000 in 1 or 2 months, you know what I'm saying? Because he's just building off of once that price action breaks, he just gets in and again and again and again and again because he understands the patience. So it's like I kind of feel like it depends on, you know, what you're comfortable with, liquidity wise, and building that up, if that makes sense.
Yeah, I just try to take one trade at a time. As long as I feel like if I'm win more than I lose, then the account balance will tell itself. I'm not as focused about the amount at this point. I just want to have the liquidity to be able to take as many trades as I possibly can. So, because today I was in a scenario when I actually couldn't take the COSM trade because I didn't have the settled cash. But
Wait, did you just say you said you try to build your liquidity so you can get as many entries as you can?
yeah, I try to have as much capital as I possibly can so that I can take as many trades as I can.
Yeah, that is a different mentality. I'm not gonna lie.
Yeah, this is where we're going to start the debate at because of all these indicators that look like windshield wipers and everything else on this damn beautiful
All I see is
candlestick chart.
spaghetti.
Right? I was just about to say, but it works, bro. That's how he's able to take 1,800 entries. You know what I
I
mean?
know.
Like,
If I didn't know this guy, I'd be thinking he's full of shit right now with those stats he said. But I've literally sit there and listened to him and watched him
In
plot out and take a bunch of trades this month already myself. So I know he's not lying.
in
It's
my
nuts.
brother's account, I got him the COSM entry at 370 and had outs all the way up to 450. So I called him up right after I did it for him and said, "Yeah, you owe me a steak dinner."
You should have
Because
called
normally,
HH.
because normally I don't take day trades on his account because he just says, I just want you to get me in the stuff that you think's gonna go up. I trust you. That's what he says. He doesn't want to
Yeah, I
listen
don't
to
know if I admit
anything. He
that
just,
in public anymore.
huh?
I don't know if I'd admit that in public anymore on live streams and stuff. You must be a
Oh,
little careful.
I was just saying that I took the trade from my brother.
On the
I don't think
next
there's any
episode
regret.
of Family Feud.
Why don't you? H is trying to deflect right now because he lost on Cosm. Oh no, you didn't trade Cosm. It
I
was
didn't
live.
trade
That's right.
Cosm. I didn't trade
You were
Cosm.
going.
Oh
You
man,
stayed
that
away
setup
from.
though.
Yeah, I look for dips. I'm looking for dips. Cosm was going straight up. I mean, once it started ripping, there was no coming down.
The big thing that I'd say is look at your daily chart. And I
Uh-oh.
don't even know why I ended up taking the trade. It didn't pass the rules whatsoever. 370 didn't pass the rules, but on a 15-minute chart, it just looked really good when this candle started forming.
So we
And
all breaking rules today.
it was just the volume increase. That's all. That was the old day trading. But that's why I couldn't take it in my account because I didn't have settled cash. I didn't want to hold it to the close.
Nice. So you have
nobody
two
ever want to pay
commodities.
swap fees.
Well, for stocks though, it's free. There's no fees on the brokers we use, like the Fidelity, Thinkorswim, Charles Schwab.
So
They're
y'all can
all
hold the trade over the weekends, and you don't have
Yeah.
to pay anything.
yeah. None of us use margin
That's the
accounts.
thing.
We're all
I
using
still
cash accounts.
use regular or unregulated brokers. I still use KOT and Hugo's Way. So for me, like they charge for holding trades overnight.
Oh yeah,
my
no,
God.
that hurts. That hurts my soul to hear that.
That kills me to hear that.
That's just that's another reason why scalping has been the main thing too. Is like except for obviously on cryptos, for me I'll be like, damn, like do I want to hold this overnight and catch that gap? You know what I mean?
Well,
So
you're talking about on your forex trading, right?
yeah, well basically when I used to hop into US 30 and NAS basically, and then And for me, I was like, I wanted to kind of wait and kind of like, hold certain trades long term. But I was like, the swap fees and holding those over the weekend is just like a type annoying. Me and my mentor would say that all the time. So it's just like, I think for myself being self-taught, I realized like I gotta start realizing how effective and money friendly it could be using other brokers.
Oh yeah, yeah, definitely. Like I've tried every stock market broker just about, and every crypto broker just about. I have so many accounts that I cannot remember which accounts I have. I don't have any money in those, but like I've tried that many different accounts because there's always going to be something better. Like the competition between brokers just never stops. Like
Yeah, I just don't be
I
wanting to
used
get
to it did cost
distracted
per
too.
stock. Back in the day, it cost $6.99 or was it $7.99 on Thinkorswim per stock, per buy and sell. So that was $14 for you to enter a stock, even one share. And then I think it was Robinhood that came out with the free fees for stocks, and then everybody else went to free.
Yeah,
So like when I started, there was that $14 fee per trade, buy 7 per sell or 7 per buy, 7 per sell. It was ugly. But yeah, if you're talking about when you said the NAS and stuff, you're just trading futures, right?
yeah.
That's why I was charging you to hold
Yeah, like I
overnight.
said, I really stopped trading forex a couple years. Like I'll get in here and there if I see like a crazy position, but like it just does not pay the way US 30 and NAS pays out. And I mean, for me right now, and I'm trying to